This is the Scrap Metal Commodities Recycling and Economic Report by BENLEE Roll-Off Trailers and Scrap Hauler Gondola Trailers, July 2nd, 2018. Last week, prices were mixed and most economic reports were negative. U.S. steel production rose slightly and is now ahead of where it was last year and the year before, with tariffs being actually a major benefit to steel manufacturers. Oil rose a big $5.57 to $74.15. Saturday, President Trump tweeted Saudi Arabia, at his request, agreed to maybe pump up to 2 million more barrels a day. Saudi Arabia responded with, they have 2 million barrels of capacity, which will be prudently used if and when necessary. U.S. oil production was no change, staying at the new record high of 10.9 million barrels per day for the third week in a row. Lack of pipelines in areas is slowing increases, which will continue at these high prices. Iron ore rose 50 cents a ton to $67 on a good balance of supply and demand and no major news. Scrap steel #1 heavy melt was steady at $330 a gross ton on little news as well. Many believe prices should be mostly steady to up this month, with some increases on primes due to Nucor's scrap substitute plant actually being down. Hot-dip galvanized steel remains stable at $1,190 a ton on good demand and tariffs, which are allowing higher U.S. prices. Copper fell a big 8 cents to $3 a pound, down about 28 cents in 3 weeks as trade war issues grab headlines. Copper is actually down more than a penny this morning. The 5-year chart shows copper prices were back to where they were about 9 months ago, mainly on these trade worries. Copper inventories held steady despite all the concerns about global trade that has taken down prices. Aluminum was down about 2 cents to 95.9 cents following copper down on the global trade concerns. Aluminum LME inventories fell yet again and are approaching yet new 8-year lows on pretty good demand. Last month, as part of national security, not an accusation of dumping at low prices, the U.S. hit Canada and other countries with 25% steel and 10% aluminum tariffs. Canada is the largest importer of steel to the U.S. Yesterday, Canada implemented counter tariffs on U.S. goods. Trade war on. China's June manufacturing index fell slightly, but remains trending up as output and new orders rose at a slower pace and new export orders declined for the first time in 4 months. Business sentiment also hit its lowest level since January. U.S. GDP was finalized at 2.0%, clearly a disappointment as personal consumption fell, with people feeling nervous about what's going on with trade and the inability to hire workers to increase production. May's U.S. single home sales jumped 6.7% to an annualized rate of 689,000, the highest rate since September. Sales in the South hit their highest level in about 11 years. Upside remains huge in that we are only about the levels from the 1960s when the U.S. had about 100 million less people, and this level is less than half the all-time high in 2005. May's U.S. orders for manufactured durable goods fell 0.6%, which was better than April's 1% decline. Transportation equipment, mostly motor vehicles and parts, led the decrease. Orders for non-defense capital goods, excluding aircraft, a proxy for business spending, slipped just 0.2% last month, after jumping by 2.3% in April. First quarter's U.S. corporate profits rose 8.7% to an all-time high. Tax cuts remain terrific for corporate profits, and in many cases, shareholders have been having great returns, including major increases in dividends. Wall Street's Dow Jones average fell 310 points to 24,271 as markets remain concerned about inflation and trade wars and are constrained by the inability to hire skilled workers. As always, feel free to call or email me with any questions, and we hope all have a safe and profitable week. Happy July 4th.